All right, good afternoon, and we are doing an update review for today, and today is January 25th, 2024, and it's a Thursday. And one more day, we close this week. This week is a 4-week of trading, so a year we have 52 weeks. So we are in the 4-week right now, and we have a lot of big cap reporting. And next week we will have more. I mean, next week all the not all. I think Tesla reporting yesterday, right? We have Magnificent Seven, right? Yep. So we have Tesla yesterday. Next week we're gonna have Google, Amazon, Apple, Meta, Microsoft. I think Nvidia a little bit late. I think it is way late into the February. So Nvidia always report late. So that's the historical artifacts right there. And today we have the GDP come out positive on Thursday. So that's the high impact or medium impact news this week. Next week gonna be I think next week we also have next week we have Fed meeting. I believe next week we have Fed meeting right there. Wow, first meeting, very interesting. Tuesday and Wednesday. Normally Tuesday and Wednesday. Let we double check to make sure it's right. Yes, Tuesday. So that's the big decision right there. That's high impact deal right there. Whether the Fed gonna hold the interest steady or they're gonna drop trades, increase. So very interesting. But so far, the markets, you see that it positioned to go up. You haven't seen anything like that. See the whole, if you go by monthly, right? Let's see, look at right here. We go by month. You can see that's very crazy. The market is way up. Yeah, look at that. Right? In 3 months in a row. November, December, and January. When the last time you see that 3 months on a row and broke all-time high. This October, November, December, and January sell off. But this year, January is strong and broke all-time high. So very unusual scenario right there. So we see out of October, you see the pattern right there. Right, October is a good time to go and buy. Yeah, you see the pattern right there. You put a order buy right here, buy stop right here. From September. Same right here. You put orders right here. Boom, it could carry you. So, watch for September. Same idea. You see right there. You put your, you buy order at the low or at the low right here, and boom, it go. September, EF right here. You put right here, right? The buy stop right here. It will carry you when it hit right here. Boom.
Normally, you know, October and November, December, they buy it up. But this year, is that COVID or something? 80. Very strange. You see, October only or November, December, then drop in January. See, all October, most of the time October up, coming on down, up 20%. So 90% is up 20%. But anyway, that's enough for the monthly. Let's see the market for today, right? It kind of a little bit, you know, like yesterday, we have a gap up, and then exactly at noon, it show up all the way into the one standard deviation, right? You have one standard deviation here. Where is our one standard deviation? Oh, okay. It reached the standard deviation into the up to 0.5, and then it reversed. That is and then it reversed. It reached let's see, I think it reached one standard deviation to the downside. Yes, so it did one standard to the downside right there. I think gap up, right? Gap up and reverse at 1 p.m. That's the pattern that we called yesterday. Let's open the chart and to see, because we want to review yesterday and compare with today. So we kind of see what the patterns show up. So here's an idea, right? You have a gap up, and yesterday the gap up compared with the average 200, the average is positive, above 1. So that's very significant right there. And then you know, we have identified breakout level, right? And we see the doji, we see the order block, doji, then we know go in short. So until it target DRLO or it go down all the way to one standard deviation right there. That's the huge trade right there. Okay, let's look at today. Okay, today we have the same idea. You know, it gap up, but the difference is that the trigger gap for today is not trigger because it's not above the 200. You know, the gap only $2 and 2.185. Yesterday 2.95. So that's much it trigger the gap right there. But today is similar, but the difference from today is that the Dow trend start a little bit early, right? Yesterday exactly at 13, right? But today at 12, not at 12, but 11:50, it starts show up right there. And yesterday it swing both ends, right? It go up and it go to 0.5 standard deviation, and then it's it epic, you know. That's the beautiful of trading. That in order to go deep, it's gonna go up in an epic way right there. You see yesterday, yeah, it go all the way to one standard deviation, and then oh, boom, it sell. Yeah, it epic, you know, proportion right here, right? It pull high above 1.5 standard deviation, but it never reached 1 standard deviation, and go all the way to reach 1 standard to the outside right there. It did close the gap, by the way. The same things happened today. So if we target the gap in both cases, then our target is hit. You see, it this the gap we marked out, and he hit the gap. He hit at 2 p.m. Eastern time, and then it create a 4 breakout right here. So if you put the gap right here, you put a buy stop right here, you have a good chance to go long right there. See that? But today you don't have the epic, moving up above 0.5 standard deviation and then all the way down. It didn't reach that because the gap today not even trigger also. But you have a beautiful setup, and we did took 2 trades today. The first trade we short them, right? We see, wow, beautiful right here, 4 breakout, auto block, doji candle. It's just everywhere. You see yesterday the same idea. You see auto block, breakout level, right? Auto block, doji, boom. But yesterday the retest is just very weak. It don't go up to the fair value gap. Our educated guess is that because so much sell side liquidity, it doesn't need to go there and drop more. But the idea that you see the fair value gap, I mean, the breakout level and auto block and the doji candle. So same thing happened here. The pattern repeat itself. So that's the beauty right there. So we see the pattern repeat. We just bang it, right? When you are practice long enough, you see right here auto block. You see the breakout level, we need to level, and then we see the auto block, which is the candle close above that, and you see the doji, then going and short them. Right, see the doji, going short them. We'll stop lock up here. Anyway, we didn't, we see that, and we patient, we wait for its retest, and we enter right here. And you know what? We put a stop lock right here. So we still stay in the trade, and we thought we're gonna follow through, but it did not. So it's direction, and then it's open rejection that we exit. So we take a loss of half on R. And then when we see this, we try to re-entry, but because of the loss earlier, we don't want to be curved, because it just sometimes we take time for us, because the emotion is too much for it, right? We just take a long trade. Let's be honest, we still impact by by the loss earlier we take, right? And then before that, we have loss on Friday. On Friday, we short twice. Right? We short, we lost, short, and then we let the stop loss run, and that really huge impact on us. So that's why I take practice to detach the emotion. So if we are in the right mind, we should take this short right here. It's perfect in this pattern right there. Right, it's still under this auto block. So the best way for us is when it's above there, you see auto block, I mean the 4 breakout level, just do a sell stop, and then it go below, it carry out into the trade right there, and we put the stop loss above here. But we let a little bit, we feel a little bit, side effect from the loss, so we didn't took the trade, so we mixed the whole move right here. So basically we're going right here. I believe we're going right here. 20 or right here. Let's look at a screenshot to have exactly what happened. So it's around here, right? 11, where is our 11? Okay, right here. So at that moment, I think 11:15. We go in 11:15. We saw it's perfect, right? Starts up and you see it coincident or it confluent with the ICT concepts, auto block, fabric gap, and retest. It go into there perfectly. So we go in, we put a stop loss above there, and our target just 0.5 standard deviation right there. So it's 1 to 2 residual ratio. Well, we take it the trade. However, it did not go 15, right? Yes, we go in right here. But you see that? It go up, we're still in a trade, and then go here, we get very comfortable, right? We say, well, it's gonna go our way, but somehow it got pushed back, and it got pushed back again, so it's a good idea that we get out, right? If we want to stay in the trade, we have to have a bigger stop loss. What we call with 2 up stop loss here, it doesn't make sense to stay, so we get out, and we take a loss of 0.5 R. However, if we re-entry here, we have a perfect setup here, but we did not re-entry like we talked earlier. We did not re-entry from here because of the side effect we have. But if we trade like a mechanic, right, without less the previous prior trade impact us, then it's a perfect going. That's our goal right there. We will try to practice that, right? We will try to practice re-entry. Yeah, it does not mean that, we just do it. Don't thinking too much. That's not the whole idea right there. But anyway, we kept a very beautiful, long trade. Yeah, so we learn our lesson right there. So next time, if we in the real time, if you watch the video, we saw that, and the first idea in our head that we're gonna short them, but then we at that moment our mind jump back to the previous experience, right? We just lost the trade today, and then on Friday we short twice and get lost. So it's kind of have a negative impact on us. So we're reluctant. We were reluctant to take the short trade. So that's what happened, and we try to internalize our thought process right there. So that helped us to handle our emotion better. Basically, trading is about, 90% is psychology, psychological skill, experience. That's it. But anyway, when we saw it go down, it hit 0.5, which is exactly what we are short with projection, and then it bounced right there and it go down, right? And then here's what we took the trade right here. All right, our idea is that we mark out the breakdown level, right? When it come down, and then here's the second trade we take. It's a long trade. What is the long trade? We believe that we entry right here, 1335. Yes, it's a 4 breakout right here. So basically we enter right here and 435. So we mark our we mark our stop loss and our target. Target right here is the DR low, a very conservative target right there. If for lack of the better word, if conservative or very easy target, right? You're gonna retest the DR low right there. And in this case, we use a bracket order, which is put our stop loss and also put our target. By default, it's $1, but we move to our desired target right there. So we go in at 1335. And then just 5 minutes later, it hit our target beautifully. You see, it hit our target right there. So we have 1 to 2, actually 1 to 4. Yeah, beautiful. 1 to 4, right? Yeah, 1 to 4 risk reward. Just 5 minutes, we get 4R right there. What else we expect? That's the best trade we have. Make us smile. It must, make our day. Yeah, so we get 4R right there. We reach 14 cents and we got 56, exactly 4R. We're so, happy with this trade. Yeah, so we go in right there, right? We see that it's a 4 breakout. So when it's below that level, we put a buy stop and we put the stop loss just below that. And it hit right away. We get out. We're happy. So first trade, we lost half an hour. This trade, we gain 4R. So the whole day, we gain 3.5R. That's a good day for us right there. Really grateful for the market gives to us. So basically right here, right? The next, it hit right there. Beautiful. And when it come down here, we're done for today, for the day after 2 trades. That's our rule right there. We only take 2 trades a day, and one trade allow us 1 entry. So that's the rule for this year. Last year we only take 1 trade up a week, right? The whole week we only take 1 trade. That's no re-entry. But this year we modify our rule, right? That's the whole idea. Set the rule, and then after a period of practice, come back and modify the rule and reaccess and modify the rule. So that's the rule for this year. We take 2 trades a day, and 1 trade we have 2 entries, first entry and second entry. That's the idea right there. So we're done for a day, but we saw the beautiful setup. You can see right here, right? If you mark down this level, is 4 breakout, beautiful right here. So when you see this down, it open down, then you put in a buy stop at this level. You have a good trade there. Right? And yeah, you said you have a good setup right there. You see that? And when this candle, not even, close below that, so this is a very good level to go. You see right there, 2 candle down, and this candle is dozy. So if we are late, we missed this entry right here. This is a perfect entry for us at 1250 right there. 1250, yes, 1250 right there. If you late the first entry right here, 1410, then you can then we can re-enter on 1450, which is 30 minutes later, gives you a perfect entry right here. Because you know why? Because this is the breakout level, right? And when it retests, it don't even close below that. So if you pay a little bit closer attention, you can see that rejection, right? Rejection, and right here is perfect dozy candle. So if we make entry right here, you can put entry right here. basically we put a buy stop above this doji candle, right? That's the whole idea right there, and it will carry us into the move right there. That's the technique we use, you know, for doji candle. The same right here, you know, you put a sell stop below the close of this candle, right? For the long, you put the buy stop at open. For the short, you put a sell stop at the close of this candle, and that's it. It carry you into the trade. Retest, carry your trade. And if we going right here, you see, let's say we're going at this way, because we want a confirmation in this case, confirmation rate, which is stay above this 4 breakout, and we put a low. It's a perfect long setup. You know why? Because the gap fill, right? You see the gap fill, and it's already test below the gap. A lot of people are gonna go in and short, right? That's the bear trap right there. Is 4 breakout level right there. Yeah, so we can use this level at a 4 breakout also, or we can use, you know, this level. So be perfect for long after the gap fill. So that's an idea right there. So if we go in here, we put maybe, yeah, our stop loss a little bit wide, right? If we want, we can put just below this or this right there, because it's below the breakout level, so it should be good right there. There are two ways we can handle that, right? If we a little bit generous after the wing, right? We should have a little bit after the wing, then we can afford a bigger stop loss, which is this way here. $56 even. But anyway, if we and our M is just maybe the mid-range, that's the very reliable target right there. Then yeah, we have 1 to 3 ratio right there. So if we either have a narrow or we have a you know, almost double the stop loss right there. But if we go with this stop loss, we have a ratio 1 to 8 right there. Yeah, 20 times 8, maybe 1 times 7, 1 to 7, 1 to 3 and 1 to 7 ratio right there. Beautiful. You see it fill out the gap and then boom, it reversed. Beautiful setup right there. You know, we could ask better than this setup. So this is the signal tell, the last signal tell us to stay in short. So we can put a order right here on the high or on the open of this candle. It could carry it into the trade after the gap fill. So that's the huge setup for it right there. So we can say something like this, right? Yeah, let's do something right here, meaningful right here. What you gonna call this setup, right? Basically, we call this setup is a gap up. Okay, first is gap up, right? And then fill. Oh, gap up, fill and reverse. Gap up, fill and reverse. Is that what it says, right? Fill and then it go back up, right? Let's say gap up, fill and up. Yeah. So the entry time is around 1450. And we need to watch out for dozy, right? Dozy on a 4 breakout, right? This is the dozy on a 4 breakout, right? It's gonna break out, but it's gonna be a 4 breakout. Yeah. At 14:45, and the risk reward ratio is huge. If you get it right, you know, it's gonna be 1:7 risk reward ratio right there. Or you can ask for more. What I want to say on this setup. Gap up, fill and up. I think we need to have something similar to this. Okay, let's go with it for now, and then we can try to revise the verbiage later. So first is a gap up, it fill, and then it up again. How about it up again? Yeah, it's up again. And today's January 25th to 24, Thursday. Oh, we have something like yesterday, right? We call it gap up and reverse. It says it go up and reverse to fill the gap. That's what it is, right? Yeah, the same idea, right? Is gap up and reverse, fill the gap. Yeah, but today is diff. It's a little bit different. The story, but fill the gap and then it go up again. But yesterday it don't have enough time to do that. But today I have enough time to fill the gap and go up again. Okay, so two scenarios different, right? You have a gap up, reverse, right? You have a gap up, reverse, fill. Yeah, I think we should say gap up, right? Reverse to fill the gap. And then today you have a gap up and you fill the gap, then you up again. Yesterday it just go down and not go up again. So that two scenarios related to the gap right there. First, Yesterday we have a gap up and it reversed to go down to fill the gap, but today we have a gap up, we have reversed to fill the gap and up again. Yes, up again. Oh, 1 hour early. Okay, that's an error right there. Anyway, thumbs up. Thank you so much for your time and interest. We're grateful for these opportunities, right? We are doing what we love, and opportunity and success is coming to our way. Bye for now. Have a wonderful evening.